Top of the morning to you. This is Business News coming to you live from our Refill studio. My name is Keramungukas. On the news this morning, the Nigerian Naira maintained a stable yet cautious position against the US dollar in the early trading hours of Tuesday, 10th March 2026. This information is from the Nigerian Foreign Exchange Market, NFEM, and informal trading channels indicate that the local currency is successfully absorbing the uptick in corporate demand observed at the start of the week, supported by high liquidity and a 13-year peak in foreign reserves. In the official window, the Naira opened at 1,394 per Naira during the morning trading, and the rate reached a high of 1,398.82 before gaining some ground. By mid-morning sessions, the rate showed a positive trend, appreciating to 1,396.24 per dollar as market supply from the central bank and authorized dealers met the prevailing demand. The current levels reflect a consolidation phase following the close of last week's trading. Authorized dealers report that the Central Bank of Nigeria, CBN, has been proactive in ensuring the willing buyer, willing seller model remains functional, which has prevented the speculative spikes that historically plagued the markets on Tuesday morning. In the parallel or informal market, the exchange rate continues to shadow the official window with a minimal premium. As of this morning, the dollar is being exchanged at rates ranging between 1,405 and 1,415 per dollar in major hubs like Lagos and Abuja. The spread between the official and black market rates remains exceptionally narrow, holding steady at approximately 1% to 1.5%. Market analysts attribute this sustained convergence to the CBN's consistent supply to Bureau de Change (BDC) operators, which has successfully decentralized foreign exchange access and reduced the urgency for high premium transactions in the informal sector. Several key drivers are providing a supportive backdrop for the Naira this Tuesday, to include record external reserves, as Nigeria's gross foreign reserves recently surpassed the $50 billion mark, providing a formidable defense against currency volatility and external shocks. Inflationary outlook, with headline inflation slowing to 15.10% in the latest reports, the real value of the Naira has stabilized, making it more attractive for both domestic and foreign investors. Consistent oil inflows, crude oil production has remained steady at 1.46 million barrels per day, ensuring a reliable stream of petrodollars that underpins the stability of the NFEM. Interest rate sentiment. Following the 50 basis points cut in the monetary policy rate (MPR) to 26.5% late last month, the market has entered a stabilization phase that favors long-term capital inflows. The Naira yesterday depreciated to 1,425 Naira per dollar in the official market, the lowest in 2 months, following rising dollar demand triggered by ongoing war in the Middle East. Data from the Central Bank of Nigeria, CBN, showed that the indicative exchange rate for the Naira rose to 1,425 Naira per dollar from 1,398 Naira per dollar last weekend, reflecting 27 Naira depreciation for the Naira. The nation's currency has been on an appreciation trend in the official market since February 17, reaching 1,337 Naira per dollar early last week, before it began a gradual depreciation to 1,395 Naira last weekend. Cumulatively, the local currency lost 88 Naira to depreciation in the last 3 weeks. Similarly, the naira depreciated to 1,410 naira per dollar in the parallel markets from 1,405 naira per dollar last week Friday. Consequently, the margin between the parallel and official markets widened to 15 naira per dollar from 7 naira per dollar last weekend. Investigation revealed that the depreciation of the naira, which aggravated in the last weekend, has been driven by rising demand for dollars by foreign portfolio investors, FPIs, exiting the country in response to increased risk perception triggered by the war between the US, Israel, and Iran. According to a banking industry source, the Central Bank of Nigeria, CBN, last week had to inject $500 million to intervene in the forex market to moderate the impact of rising dollar demands from existing EPIs on the naira. Similarly, analysts at financial derivatives company said the decline in the naira comes amid intensified demand for the US dollar, driven by escalating Middle East tensions. Also confirming this development, analysts at Cowrie Asset Management said the naira weakened across both exchange channels on Monday, reflecting heightened currency pressures across both the regulated official segment and the informal foreign exchange market. The Nigerian Export Promotion Council has urged agro-exporters to tap the European Union's over 400 million strong consumer market, warning that non-oil exports account for only 10% of total trade with the bloc despite a $21.87 billion trade in 2024. Executive Director and CEO of NEPC, Nonye Ayeni, made the disclosure during the 8th series of NEPC webinars yesterday, themed EU regulations for importation of Nigeria's agri-food products, adding that the figures represented a significant opportunity to expand Nigeria's non-oil export footprint. According to her, the EU remains one of Nigeria's most strategic trade partners, accounting for about 26% of Nigeria's total trade, with key exports including cocoa products, oil seeds, agricultural produce, fish, seafood, rubber, leather, and wood. She stated available statistics show that Nigeria's total exports to the EU in 2024 stood at $21.87 billion, while EU exports to Nigeria was $20.2 billion. Non-oil exports represents about just 10% of Nigeria's total export to the EU. According to her, this represents an opportunity for Nigeria to further grow its market share in the EU, so it becomes more significant again as the country experiences increase in non-oil exports, and considering that Nigeria is endowed with numerous agricultural products and commodities. So, this is an opportunity to improve the bilateral trade between Nigeria and the EU. She said global trade today is no longer driven by price and availability. It is increasingly governed by standards, regulations, traceability requirements, and sustainable principles, as Nigeria is abundantly blessed with agricultural resources and a wide range of exportable agri-food products, including cocoa, sesame, hibiscus, ginger, and spices. Nigerians have been exposed to more hardship as oil marketers yesterday increased the price of premium motor spirits, PMS, also known as petrol, to 1,300 naira per liter from 1,050 naira per liter. This indicates an increase of 24% following the consistent rise in crude oil prices to $110 per barrel in the international market amid the Middle East crisis. Also, the pump price of automotive gas oil, also known as diesel, increased to 1,380 naira per liter from 1,100 naira per liter at MRS outlets, while the NNPC Limited outlets sold it at 1,680 naira per liter in Lagos and environs. The price of petrol rose sharply to between 1,200 naira and 1,300 naira per liter in Ibadan and neighboring communities in Oyo State. Prior to the latest increase, the product was sold at between 1,020 naira and 1,080 naira per liter. A member of the Independent Petroleum Marketers Association of Nigeria, IPMAN, who spoke on condition of anonymity, attributed the increase to the rising landing cost of the product. According to the marketer, the cost of lifting fuel from the Ibadan depot has climbed to 1,175 naira per liter. Similarly, in Abuja, petrol price rose dramatically at retail outlets from 880 naira per liter 7 days ago to over 1,300 naira following the decision of Dangote Petroleum Refinery to increase the gantry price of petrol and diesel to 1,175 naira per liter from 995 naira per liter and 1,620 naira per liter from 1,430 naira per liter, respectively. In a notice to oil marketers, the refinery attributed the development to the prolonged instability in the global oil markets, resulting in the price of crude oil rising to $110 per liter from $102 per barrel. The price from the refinery has seen 4 different increases by filling stations in Abuja in the past 1 week. Now, the federal government has ordered a temporary suspension of the enforcement and collection of helicopter landing fees imposed on oil and gas operators after concerns were raised by stakeholders in the petroleum industry. The directive was issued on Monday by the Minister of Aviation and Aerospace Development, Festus Keyamo, during a meeting with the Minister of State for Petroleum Resources, Senator Henikin Lokpobiri, and representatives of major oil industry groups at the headquarters of the Aviation Ministry in Abuja. A statement signed by Tunde Moshood, Special Advisor on Media and Communications, said the meeting brought together officials from both the aviation and petroleum sectors to discuss the implementation of the helicopter landing fee prescribed by the Nigerian Airspace Management Agency, NAMA, for helicopter operations carried out by international oil companies operating in Nigeria. The petroleum sector delegation included the Chief Executive Officer of the Nigerian Upstream Petroleum Regulatory Commission, Orise Meyi San, as well as representatives of the Oil Producers Trade Section and the Independent Petroleum Producers Group. Officials of the Aviation Ministry present at the meeting included the outgoing Permanent Secretary of the Ministry, Yakubu Adam, Kofa Mata, the Managing Director of NAMA, Engineer Umar Farouk, senior officials of the Nigeria Civil Aviation Authority, and other stakeholders in the aviation sector. During the meeting, oil industry representatives expressed concern that the continued enforcement of the statutory fee on helicopter operations servicing oil facilities could disrupt critical operations within the sector. The fee applies to helicopter operations involving oil fields, terminals, platforms, rigs, floating production storage and offloading facilities, as well as heliports, helipads, airstrips, and aerodromes used in the course of oil and gas operations. Following deliberations, Keyamo directed the temporary suspension of the enforcement and collection of the helicopter landing fees for an initial period of 2 months. The minister also announced that an interministerial committee comprising representatives from the aviation and petroleum sectors will be constituted immediately to examine the issues raised and work toward an amicable resolution that will produce an acceptable framework for all stakeholders. Both ministers reaffirmed the commitment of their respective ministries to continued collaboration in ensuring that regulatory policies support operational efficiency in the aviation and petroleum sectors, which remain critical pillars of the Nigerian economy. And that concludes business news this morning. Do remember to stay tuned for News Track at 2 p.m. Thanks for watching.